Let me ask you something. What happens when a global superpower stops playing by the rules? When a country that's already under immense scrutiny decides to throw a wrench in the financial system, not just for its neighbors, but for the entire world. That's exactly what Russia has done, and the ripple effects are spreading faster than anyone anticipated. It's no secret that the US dollar has been the bedrock of the global financial system for decades. Every major international transaction, from oil to gold, is priced in dollars. But here's the million-dollar question. Is that dominance at risk? Several emerging markets, Russia included, have been quietly moving away from the dollar, turning instead to alternative currencies like the Chinese yuan. Why? Because the world is starting to question whether the US dollar is still the safest bet. According to a 2023 report by the IMF, global reserves in US dollars have dropped to their lowest point in over 25 years. And that trend doesn't seem to be slowing down. The US faces mounting national debt, rising inflation, and questions about its long-term stability. If the world stops trusting the dollar, we could be looking at a global financial shift of seismic proportions. If the global shift away from the US dollar continues, the repercussions could be enormous for the American economy. And here's why. It's all about leverage. The US enjoys what's called the exorbitant privilege. The ability to print its currency without worrying much about inflation because the demand for dollars is so high around the world. But if that demand dries up, imagine inflation on steroids. Higher interest rates, skyrocketing prices, a weaker dollar, and the potential collapse of the American financial system. We've seen small cracks already. Russia and China are using bilateral agreements to bypass the dollar in trade deals. In fact, in 2022, Russian ruble-yuan trade hit record highs, surpassing traditional dollar-based transactions. If this continues, the US may find itself losing the very thing that has kept its economy on top for decades. Russia's response to sanctions hasn't just been a tit-for-tat retaliation, it's been strategic. When the West imposed financial penalties on Russia following its actions in Ukraine, freezing Russian assets and cutting off access to international banking systems, Russia struck back in an unexpected way. By freezing EU bank assets within its borders, Russia has immobilized billions in European investments, destabilizing financial systems across the continent. The broader implications? It's a dangerous game of economic brinkmanship. Russia is signaling to the world, if you hurt us financially, we can hurt you back, and we're not afraid to do it. If you are enjoying our content, please hit the like button. To help us even more, please leave your thoughts and feedback in the comments. Your engagement helps us grow. Thank you. You'd think after all that's happened, Western financial institutions would have packed up and left Russia. But here's where things get tricky. Money has a way of complicating even the most straightforward decisions. As of 2023, major Western banks, Deutsche Bank, Citigroup, and JP Morgan, still have ties to Russian finance. Why? Because the cost of leaving is just too high. These institutions have billions tied up in loans, investments, and partnerships. Cutting ties would mean severe financial losses, not just for the banks, but for the economies of their home countries. Now listen to this. Despite the sanctions, European banks have found ways to help Russia stay afloat. Take Austria's Raiffeisen Bank International, which continues to facilitate Russian transactions with Western currencies. It's a loophole that's leaving the West's sanctions regime full of holes. The reason this is such a vulnerability is simple. Sanctions are only effective if they're airtight. By allowing certain financial institutions to bend the rules, the West is undermining its own efforts. According to Bloomberg, as of early 2023, Raiffeisen Bank has played a crucial role in ensuring Russian access to euros and dollars, making it easier for Russia to continue its global operations. So, if sanctions are in place, why hasn't the European Union fully disconnected Russia from its banking infrastructure like it did with SWIFT? The answer is complicated. Cutting Russia off completely would mean massive disruptions, not just for Russia, but for Europe as well. Russia is a major supplier of energy, and without access to Russian banks, Europe could face an energy crisis that would send shockwaves through its economy. In fact, according to Euronews, 40% of Europe's natural gas still comes from Russia as of 2023. So, the EU is walking a tightrope between punishing Russia and protecting its own economic interests. Russia's gas exports to Europe should have been crippled by the sanctions, but they weren't. Why? Because energy is the one area where the West can't afford to fully enforce its sanctions. According to Bloomberg, Europe imported over 155 billion cubic meters of Russian gas in 2022 alone. And as much as the EU would love to replace that with alternative sources, it's not that simple. Without Russian gas, parts of Europe would face devastating energy shortages, especially in the winter. It's no secret that banks are the lifeblood of international finance, and when it comes to Russia's access to foreign currencies, one name stands out: Raiffeisen Bank International. Based in Austria, Raiffeisen has long been a key player in Russian financial markets. And despite sanctions and mounting geopolitical tensions, it continues to facilitate Russian access to Western currencies like the euro and the US dollar. Raiffeisen's presence in Russia dates back to the 1990s, and it has since become a crucial conduit for transactions involving Western currencies. But in the wake of the sanctions, the bank's continued operations in Russia have raised eyebrows, especially among EU regulators. According to a report by Bloomberg in early 2023, Raiffeisen accounts for over 50% of Russia's euro transactions, a staggering figure, given that most European financial institutions have scaled back their operations. Why does this matter? Because it illustrates a critical vulnerability in the West's sanctions regime. By allowing certain banks, like Raiffeisen, to continue operating, Russia has been able to maintain a degree of financial stability, despite the economic squeeze being applied by the West. Raiffeisen's role has become so significant that EU regulators have reportedly started investigations into the bank's dealings, worried that it could undermine broader efforts to isolate Russia economically. But the Austrian bank, while under pressure, is unlikely to completely sever ties without serious financial repercussions for itself and Austria's economy. If you think Russia is just sitting on its hands waiting for Western sanctions to tighten, think again. Russia has been busy building a parallel financial system, and they've found a willing partner in China. Since 2014, Russia and China have been working together to reduce their dependence on the US dollar. But since the sanctions hit in 2022, this collaboration has intensified. In fact, bilateral trade between the two nations has skyrocketed, with yuan-ruble transactions reaching all-time highs. Russia's central bank has increased its yuan reserves to the point that China's currency now accounts for more than 17% of Russia's foreign exchange reserves, according to the Russian Finance Ministry. This is no accident. By building an alternative financial framework with China, Russia is attempting to bypass the US-led financial system altogether. What does this mean for global finance? It's a potential game changer. If China and Russia succeed in expanding their financial systems to other emerging markets, they could undermine the dominance of Western financial institutions and the US dollar. The International Monetary Fund, IMF, has already warned that the de-dollarization trend could accelerate in the coming years, especially as more countries look for alternatives to the US-led system. Let's pivot to a different but equally important question. What happens to Western companies that continue to operate in Russia? The short answer is, they're playing a high-stakes game with potentially devastating consequences. Western companies like PepsiCo, Unilever, and Total Energies still have a presence in Russia, even though many of their competitors have left. For these companies, the stakes are clear. Russia remains a large and profitable market, but staying there comes with significant risks. First, there's reputational risk. Many Western consumers are increasingly vocal about boycotting companies that continue doing business with Russia. Second, there's the financial risk. Staying in Russia could subject these companies to future sanctions, leading to asset freezes or even nationalization of their operations. According to a New York Times article from June 2023, over 27% of Western firms operating in Russia have reported disruptions due to sanctions, and those disruptions are only expected to grow. Finally, there's the legal risk. Many of these companies are operating in a gray area, caught between complying with Western sanctions and maintaining profitable operations in Russia. It's a delicate balance, but one that could tip at any moment. Now, let's talk about a potential wild card in this entire scenario. Donald Trump. The former US president has floated the idea of imposing a 100% tariff on countries that shift away from the US dollar in favor of alternative currencies. Could this lead to a global trade war? First of all, imposing a 100% tariff on countries that de-dollarize would be a radical move. It would mean that the US is essentially punishing its trade partners for seeking alternatives to the dollar. This could set off retaliatory measures from other countries, particularly those who have already established strong trade links with China or Russia. Experts say that a tariff of this magnitude could push the world into a full-blown trade war. According to a report from The Economist, such a move would likely lead to counter-tariffs from China, the European Union, and other major economies, potentially costing the US billions in lost trade. The World Trade Organization, WTO, has already expressed concerns about the potential for such protectionist measures to destabilize global markets. Let's ponder the big question. Is the US dollar's dominance really in jeopardy? The short answer is, it's complicated. The US dollar remains the world's most widely held reserve currency, accounting for 58.36% of global reserves according to the International Monetary Fund, IMF. But that number has been gradually shrinking. As we've discussed, countries like Russia and China are actively seeking alternatives, and more nations are watching closely to see how this plays out. So, what can the US do to safeguard its financial leadership? The first step is to address its own vulnerabilities, reducing national debt, stabilizing inflation, and working to restore confidence in the dollar. But that might not be enough. The US will also need to strengthen its international alliances and adapt to a rapidly changing global economic landscape. Make no mistake, the US dollar isn't going to lose its status overnight, but the cracks are there. And if those cracks grow, the consequences for the American economy and the world could be profound. As we've seen, the world of finance is shifting beneath our feet. Russia's freezing of EU bank assets is just one piece of a larger puzzle, one that includes shifting alliances, a possible decline of the US dollar, and the rise of new financial frameworks. What happens next? That's up to the decisions being made right now, both in Moscow and Washington. If you are enjoying our content, please hit the like button. We hope you are enjoying this video. We're thrilled to have you with us today. If our content struck a chord or sparked some inspiration, go ahead and smash that like button and hit subscribe to join our awesome community. Please share this video to help us grow. Your support is super valuable. Check out another video from our channel, which is now on the screen.